What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today is Thursday on the back side of the week, day 2 on the back side of the week, right? So, one thing that you need to remember when you're trading, okay, we're trying to keep this as simple as possible. For that reason, you need to remind yourself that there are only 2 types of trades, okay? Long trades, short trades, all right? We have a buy model, we have a sell model, reversals, trend trades, pump and dump and pump, okay? There's only 2 types of trades, okay? Think about it that way. There's only 2 types of trades, reversals or trend continuation trades. Now, this slide that we're looking at here, this is an example of a reversal trade where we go up, we tap into a level, price is rejected from that level, all right? We may pump back up into it again, then the market rolls over and starts putting in lower lows for the reversal from that level, okay? Or we could have something like this, where we expand through that level does not hold, price does not reject from that level, we have big candle closures above that level, okay? Then price may pull back on top of that level, maybe go through it a little bit, pull back into your EMA, coil sideways into the EMA, throwing wicks, engulfing to the upside, okay, for the trend continuation trade. So there's only 2 types of trades, a reversal trade and a trend trade. And we're going to be using the same levels for both. We just went over this in the Discord the other day, all right? When price hits a level, that's not an automatic signal, right? Just because price hits the high of the day level, we're not going to automatically sell this market. We need to still see certain things take place. When price reaches that level, it's asking a question, okay? We're trying to figure out, is price going to be rejected from this level, accepted at this level, or is it going to expand through this level? And each one is going to have its own set of characteristics. So if price is going to reject from that level, all right, then obviously you're going to see heavy pushes away from that level in the opposite direction. Okay, price is not going to spend a lot of time there. It's going to reject away from that level, all right? That's one scenario. If price is accepted at that level, we're going to spend a lot of time at that level or more time at that level. We're going to see overlapping candles. We're going to see a lot of back and forth sort of choppy movement like a trading range, okay? That means price has been accepted there. Buyers and sellers are happy to do business at that price level, all right? And we're just coiling there. If we're expanding past that level or through that level, we should see big candles that blow through that level. All right. It doesn't offer very much resistance or support or however you want to call it. Right. We may see that and then have that pullback onto that level and continue higher. So today on gold, we had a trend continuation trade. All right. So here's just the bigger picture. We know gold has been very bullish the last few days. Okay. Shorting gold has been sort of a risky game, okay? Even though I shorted gold yesterday, all right, and I'm sure that other people shorted gold yesterday, it's a little bit of a risky game shorting gold right now. So with that in mind, you can see we have the previous day's high and low. That's the box that price is within. And at some point, price is going to break out of that box. And we, in this situation, are trying to ask ourselves, is the high or the low from the previous day a more likely target? Where is price trying to get to, okay? And we have some special clues on the day, okay? This is a 5-minute chart. You can see here that in the New York session, after the news has been released, all right, we have broken these London highs, which are the current high of the day level, all right? Now, our last news release was right here, so that's what I mean after the news release, the entry after the news release. We broke the level before the news release, all right? But you can see this is an example of price expanding past that level, all right? Now, if you're using the playbook entry criteria, you would not enter this market short here at this level. Why? Because we never get a 5-minute candle that closes beneath the EMA. okay? But we do get several candles closing above the EMA. Notice we break that level, we pull back. Where do we pull back to? To closing price, which is that yellow line right here, the previous day's closing price. We're throwing wicks through that EMA. We have, 15 minutes coiling sideways into that EMA before we engulf and continue to go higher. All right. So once I saw that, I said, bam, okay, gold is trading higher. We just made our next higher high on the day when we broke the current high of the day. So remember, if we're still putting in highs, the high of the day has not been locked in place yet, meaning this thing could still go higher. All right. Now, if we look on a 1 minute chart, we can see here, here's our coil on top of closing price. We are through that EMA for a little bit, coiling underneath that EMA and then back above the EMA. You see, this is why using the 1 minute chart may work against you and why Stacey recommends you use a 5 minute chart. All right. Because on the 1 minute, we damn sure got candle closures below that EMA. You would have entered short and got played. Right. But on the 5 minute, you had no closes beneath that EMA. So use your 5 minute chart to enter the market. Okay. Just do it. That's what Stacey recommends. I know that I'm on the 1 minute chart a lot of the times. All right. But if you're going to be using the universal entry criteria of the 20 period moving average, you're going to want to be on the 5 minute chart as Stacey suggests in the playbook. Okay. So remember, two types of setups. We have a buy model and a sell model. We have a continuation model. We have a reversal model. The same levels are in play, but what matters is timing. Okay, we're after major red news and behavior of price. Remember these three things, okay? Rejection, exception, or exception. Right? Is that the right word? Price is either going to be rejected, accepted, or it's going to expand. All right. So it's either going to reverse, enter a trading range, or continue. Just like Stacey's always telling us, okay? What are the three things that markets do? Markets break out, pull back, and continue, break out, pull back, and reverse, or break out, pull back, and enter a trading range. Stacey's telling you all the same things that I'm telling you. I'm just telling you in a slightly different way so you have a different perspective, all right? And here, again, we break out of the London level, pull back, and continue. All right. So easy continuation, day two, backside of the week. I took this trade. I felt good about it. All right. I layered I had three total positions for the single trade. I closed the trade once 200 pips and profit was hit on my original target. Between all three positions we had here, I locked in over 300 pips in profit today on this trade, and Stacey highlighted the trade. Okay, he made a post on YouTube highlighting this exact trade, and I love it when that happens, bro. It's just, that little bit of confirmation, and I promise you, you will get there soon too. You'll be taking the same trades that Stacey's taking soon enough if you stick to the program. All right. I appreciate y'all, man. Until next time, I hope you continue to free your mind.